Hey, good evening, Abhi.
Good evening,
So,
Chandra.
yeah, how are you, Abhi?
I'm doing great. Thanks for asking. How are you?
I'm fine, thank you. Thank you so much, Abhi. Thank you so much for coming to our knowledge of wealth building. So, before
Absolutely.
get started, let me introduce you. Right, Abhi
Mhm.
uh, Jeevaganambi is a founder and chief executive officer of Tradelytics AI. 15 years of trading and investing experience and as well as experience in asset stocks, options and future for options and futures as well. Today we are going mainly focusing more on the charts and technical analysis, right? As a investor or beginner or experienced, always we have a challenge to read the chart and the technical analysis, right? So hopefully you will help us out to understand how we can read and efficiently make some good decisions, Abhi. Yeah, please go
Yeah,
ahead and
definitely.
yeah,
We can get
please go ahead.
started today. Yeah,
Yeah,
I would say that it's a path of learning. So, today my goal is to remove some of the common misconceptions and how you should approach technical analysis and how you go about analysis. Um, Obviously, we can't teach everything in like 30 minutes or an hour, but, definitely use this time as a way to, start building the technical analysis foundations.
sure. Thank you so much, Abhi. Abhi, could you please introduce yourself, Abhi, and as well as share your experience?
Yeah, absolutely. Again, as said, my name is Abhi Jeevaganambi, and I've been investing in trading world for about 15 years now. I did this full time even for a few years. Um, and as I'm working with a lot of traders and in the trading world, I've analyzed and felt that there's a need for an application to understand how to improve the performance of traders. That's what Tradelytics AI aims to do. So we are still in the works. We're planning to launch our MVP by the end of this year. Our goal is to look at all the trading data for traders and improve their performance by identifying opportunities where the traders are going wrong. So that's what we aim to do. And having been in this world, I've done a lot of stock trading, futures trading, options on futures, a little bit of the forex and crypto as well. So I've dabbled in a lot of different things, and I've made a lot of mistakes that many of them have made it or about to make. So all these experience comes from that. And I also want to say a disclaimer. I'm not a financial consultant. I'm not a registered financial advisor or an investment advisor. Anything that we discuss today is for education purpose only. And use it at your own risk.
Abhi, let's talk about that chart time frame.
Mhm.
Considering investment goals, right? What time frames, daily, weekly, or monthly, is most relevant for analyzing the stock chart, Abhi?
Yeah, definitely. So the chart timeframes are primarily based on your time horizon, what you're looking at. So broadly, you can classify the style of trading into four types. One is scalping, which is like you start and end the trade within minutes. And then you have day trading, which is starts and ends within a day. And then you have swing trading, which lasts a few days to a couple of weeks. And then you have position trading, which is goes from a few weeks to a few months. So based on your time horizon of the trade and what you anticipate, you have to use that kind of a chart. So I have a slide that I use at a very high level. I can show you. Um, So these are the chart timeframes that I use. And again, these are just a guidelines. You can tweak it based on what you like and what you don't like. But if I'm scalping, I'm looking at the trend on a 5 minute chart and I'm trying to enter in a 1 minute or a lower time frame chart. If I'm day trading, my trend is a 15-minute trend and my entry is a 5 minute chart. If I'm swing trading, I use the daily as my trend guideline and I use an hourly for an entry. And if it's position trading, I'm trying to invest. I'm trying to hold on to position or I'm trying to get into a position. then I look at a weekly chart and enter it during a daily time frame. So these are the charts that I use primarily, but from time to time, I might use other charts as well.
Got it. Got it. Abhi. So let's talk about the key technical indicators, Abhi. So which technical indicators would be most helpful in identifying potential entry and exit points, Abhi?
So I'll tell you what my opinion on indicators are. Indicators by design are lagging. So I always look at price action. Price action is the best indicator that you can look at. That is the most efficient way. Every other indicator, stochastics are oversold, overbought. They're all they are not the reason for me to enter a trade or an exit a trade. People say, yes, price is, overbought, stocks are oversold, but they always go from overbought to more overbought, oversold to more oversold. So they're not a deciding factor in entering in it. And when you're looking at indicators like stochastics, RSI, or moving averages, they're all guidelines. You can look back and say, yes, this indicator worked, that indicator worked. But don't make that as your primary reason for entry or exit. I do not use it. There are people who have used that successfully. And if you find a system like that that works, great, you can use it. But price is the best indicator that you can use.
Got it. Got it, Abhi. Um, let's talk about the trend identification. So based on the chart, right? So can we identify the current trend, uptrend or downtrend or sideways? And what technical signals might indicate a potential trend change?
Yeah, I think for this, it's good to look at a chart. So let me share my screen. So can you see my screen?
Yeah.
Okay. So if you look at it, this is how I trade. Like, you don't see any indicators here. I rarely use indicators. So when we say trend, it's very subjective. A lot of people use different things. I use swings as a way to identify what trend it is. So, I could see that the price went from here. So here's a swing low, here's a swing high, here's a higher swing low, and here's a higher swing high. So by definition, this is the beginning of a uptrend. And if you look at here, right? So you can say a swing low, a swing high, and there's a higher swing low, but it never made a higher swing high. So, and then the next following action is it made a lower swing low. So that is a trend termination. And when a trend terminates, usually it goes into a sideways trend. So the sideways trend is the thing that you see here, very choppy, right? And so once a uptrend goes into a sideways trend, then it could be followed by a trend continuation. If it breaks all the swing highs and goes higher, that's a trend continuation, which means that the uptrend is coming back again. Or it could break these swing lows. It never was able to go higher than this. So that's the beginning of a downtrend. So if you see here, this is the beginning of a downtrend.
Got it.
And this is what I use to identify trends. So trends usually, the three ways, as you mentioned, uptrend, downtrend, and a sideways trend. But the next level of concept is to understand multiple trends exist at the same time. So I can look at for example, so let's remove all this, right? So let's look at this is a 1 minute chart, right? In 1 minute chart, if you look at the trend, it went from a swing low to a swing high, but then right now you see it as a sideways trend. right? There is no uptrend. It's not making higher highs. It's making lower lows.
Mm-hmm.
And if I go to a 5-minute chart,
Mm-hmm.
right? So this is the trend that we see here. So it goes from a swing low, swing high, and a higher swing low, which is good, but it never made a higher swing high.
Mm-hmm.
If I go to a daily chart, or let's say an hourly chart,
Mm-hmm.
and this is still a trend in progression. So you say lowest swing low, higher, swing high, higher swing low, higher swing high. So which means it's it's in an impulse phase and it's making higher highs and higher lows. That is a indication of an uptrend. So when you're analyzing trends, you should always be aware of, don't just look at one time frame. There could be
Mm-hmm.
multiple. You should be aware of multiple trends. Yes, you have to trade with a trend if you're a beginner for sure, and also be aware what is the next time frame and what is the trend in that. So if, let's say, on an hourly time frame, it's a uptrend and you want to get into an uptrend, but on a daily chart, it's a downtrend. So the daily downtrend is going to kill the hourly uptrend for most of the times. So you have to be aware of that and use exercise caution while getting into trend, not just look at, say, hey, price is going higher, let me get in. You know, we have to be cautious about the trend and where the trend could end.
Got it. Got it, Abhi. Yeah. Thank you.
Yeah.
Thank you very much for explaining this, Abhi. Um, so where are the key support and resistance levels on the chart, and how can they be used to inform trading decision, Abhi?
Support and resistance are a little bit of a older school of thought. Um, so when, some technical analysis books define as support and resistance, when the same price hits it multiple times, then you develop a floor that is called as the support. And then when the price tries to go higher, it makes a double top, triple top. It develops a resistance. It's like a glass ceiling at that point. By definition, when it hits multiple times, um, the price is going to break through it. So the traditional technical analysis book says that, hey, the more times the price hits it, it's a validation of the support level. It's a validation of the resistance level. So I follow a different school of thought. I go
Mm-hmm.
by the supply and demand instead of support and resistance.
Got
The
it.
more a price hits it,
Mm-hmm.
support and resistance are supposed to get better. But the way that I look at it, it's orders that are waiting to get filled. So if you look at a chart, it's not a price chart. The way that I see it, it's a battlefield. It's a
Got it.
battlefield between buyers and sellers. And you have to look at the chart and say, so for example, you're still seeing the screen, right? Yeah. So when I see this chart, it's not that it's just the price and this is where the resistance is, or this is where I'm not going to say here's where the support is and here's where the resistance is. It's a little bit more than um, this is where, so, you know, this is where there's a buyers trying to push the price higher.
Mm-hmm.
So when price comes here, buyers buy the price, buyers buy the stock or whatever the instrument is.
Mm-hmm.
So price always goes up when there are more willing buyers than there are willing sellers.
Got it.
So let's say, um, you know, let's say, let's just take the S&P stock, right?
Mm-hmm.
So when the price came down to $500 or $510, if there are more number of people believe that, okay, the price of S&P is going to go higher, and let's say there are $100 of S&P at this point,
Mm-hmm.
and people who came here, there's like 50 people who are willing to sell here in this zone, right?
Mm-hmm. Mm-hmm.
So once those 50 sell orders are gone, there's only the buy orders that are remaining. So that is called as a price imbalance. Once you have only one type of order remaining, the price goes in that direction.
Okay.
So this is not just a stock market, analysis. It's the same in anything. It's just the basic supply and demand rule. So
Understood.
whenever the demand exceeds supply, the price
Mm-hmm.
goes up. Whenever the
Got it.
supply exceeds demand, the price goes down. So when
Got
I look here, so I know that there is demand here because as soon as the price hit, it went up. But
it. Mhm.
what's also to note is people believe that this is where there are sellers trying to sell and push the price down. So price came down, buyers bought it, pushed the price up, but there were not enough buyers to push through the ceiling. So the sellers pushed it back again, and the buyers bought it here again and pushed the price. And eventually, all these sellers were bought out. That's why
Understood.
the price pushed above and moved above.
Got it. Got it. Okay.
So if you look at the price chart, there's a battle happening at every location. Whenever you see price going up and down, it's the buyers and sellers battling it out. Eventually, one of the sides win. So when you look at a trader's job is not to, or an investor job is not to guess where the market is going. The trader's job is not to forecast the market. A trader's job is to figure out what could happen. It's a probability game, right? What could happen and what are all the probable outcomes and how would you trade based on all the outcomes. So for example, so when the price is fighting here, so my idea is the price is either going to go up or price is either going to go down. If the price goes up, then there's more, the sellers over here are gone, right? So then
Mm-hmm.
I would get buy. When price came here and the sellers won the battle, then I'd get ready to sell.
Got it. Got it. Yeah. It's a
Okay.
very good point.
And
Yeah.
just because I got an entry here doesn't mean that I'll always be right. I'll also know where I'm wrong and I'm willing to take a loss and get out. So for example, let's say, once the price went up, I know that there are no more sellers here. So whoever sold here, whoever shorted here, let's say that I had S&P and I thought S&P is going down and I sold at $517, right? Now
Mm-hmm.
the price went up all the way to $524. So now I'm thinking I have this FOMO, like fearing of missing out. What if S&P goes to $700? I want to get back into the exact place where I sold my S&P stock. So what
Mm-hmm.
I'm going to do is I'm going to buy right here.
Okay.
Okay. So
Mm-hmm.
the first jump you see, those are all the people that who had the FOMO are getting back into the trade right here.
Mm-hmm.
But now the battle has shifted to the next level, right? The sellers over here are selling and pushing the price down. But the sellers who pushed here, they won the battle. So they took all the buyers out here and they cleaned up all the buyers. And that's why the price took out all these lows and
Mm-hmm.
it went all the way down. So now there are some buyers here,
Okay.
right?
Mm-hmm.
So it's not that, there's probably buyers here who lost. There's probably buyers here who lost, or maybe like, they got a little bit of a bounce, but all these buyers lost. But people who bought here, now they're holding the fort and they're taking out the sellers.
Got
So
it.
if I look at the price chart, it's not just like, recorded data. It's a battlefield. And you can see the armies of sellers and buyers moving
Mm-hmm.
from one battleground to another battleground. And you as a trader or investor, you have to follow that battle plan and figure out who is losing and what is the area for you to capture. If let's say it took out all these sellers here, right?
Mm-hmm.
When all these sellers are taken out, now I'm going to see the next area where the buyers are going to be are here. So if I'm gonna get an idea, I'll go capture this zone. That's an area to be captured from me as a
Okay.
trader.
Okay.
So this I'm showing it to you in an hourly chart. This happens in 5-minute chart, 1-minute chart, week chart, 1-month chart. This is the same thing. Depending on how fast you can react and read price in real time, that's what you use to analyze the trend, technical analysis, and take your battle plan to the next level.
Got it. Got it. That's the same process, right? So
It's the same thing.
yeah, great. Thank you.